Welcome! Today, let's tackle a common puzzle for new investors. Why do stocks sometimes fall even after a company reports great results? You see a company post strong numbers, sales are up, profits are solid. You expect the stock to rise, but then the price drops. Why? The answer. Investors care about more than just the past. They're focused on the future. Think of a company's earnings report as a school report card. It shows how the company performed last quarter. Did it sell a lot? Make a profit? Run efficiently? Good results are like good grades, but investing is about what comes next, not just what's already happened. When you buy a stock, you're betting on future growth, not just past success. That's why every earnings report has two parts: the results, the grades, and the company's outlook for the future. What's called guidance. Guidance is the company's prediction for the rest of the year, and it can outweigh even the best report card. Sometimes a fantastic quarter is overshadowed by a cautious forecast. So, to really understand a stock's move, you have to look at both the results and the guidance. Let's see how this plays out with a real company. Let's dive in. Today's company is Becton Dickinson and Company, BDX for short. BDX is a giant in medical technology, making everything from syringes to lab equipment used worldwide. If you've had a blood test or a shot, you've probably used their products. Their business is steady. People need healthcare in good times and bad, so demand for BDX's products is reliable. That stability makes BDX a favorite for long-term investors. Analysts closely watch BDX, predicting its sales and profits each quarter. These predictions set the bar for how the market reacts to BDX's actual results. When BDX reports earnings, everyone compares the real numbers to these estimates. If BDX beats expectations, it's good news, at least at first glance. But as we'll see, there's more to the story. Let's look at their latest report. On February 5, 2024, BDX released its first quarter results, and they were strong. Revenue came in at $471 billion, beating the $468 billion estimate. Earnings per share were $2.66, above the expected $2.59s. That's what investors call an earnings beat. The company outperformed expectations. More sales, more profit, and efficient management. Everything looked great. Normally, this would be a reason to celebrate. But the market didn't cheer. Despite the strong numbers, BDX's stock price fell. Why? Because investors quickly shifted their focus from the past quarter to what's coming next. The real story was in the company's outlook. Even a textbook good report can be overshadowed by concerns about the future. For BDX, something in the report changed the mood. Let's find out what. 14. BDX beat expectations, but the stock dropped nearly 3% after the announcement. This confuses many investors. Shouldn't good news push the price up? Here's the twist. The market cares most about what's ahead. Imagine your favorite team wins a game, but the star player hints at an injury. Suddenly, the win feels less important. That's what happened with BDX. The strong quarter was good, but the company's forecast, its guidance, wasn't as optimistic as investors hoped. The market wanted signs of accelerating growth, not just steady performance. When BDX didn't raise its outlook, big investors saw a red flag. The past results were already priced in. The real money is made by predicting the future. So, even with a great quarter, a cautious forecast can send shares lower. The lesson: the market is always looking forward, not backward. For BDX, the future guidance overshadowed the strong results. Let's dig deeper into what guidance really means. 14. Guidance is a company's official forecast for future sales and profits. Think of it like a weather report. Management looks at all the data and predicts what's coming. Investors use this forecast to set their expectations. If a company says, "We expect to grow 10% this year," that shapes how investors value the stock. Companies usually give a range for revenue and earnings, not a single number. This gives them flexibility if things change. The key investors and analysts compare this guidance to their own expectations. If guidance is higher than expected, the stock often jumps. If it's lower, or just matches expectations after a strong quarter, it can disappoint. For BDX, the guidance didn't excite the market. Let's see why that matters so much. Why does guidance matter more than last quarter's results? Because stock prices reflect what investors believe about the future, not just the past. When you buy a stock, you're buying a share of all its future profits. Anything that changes the outlook for those profits can move the price fast. Imagine buying a coffee shop that made $50,000 last year. If you learn a Starbucks is opening next door, suddenly, last year's profit matters less than the new threat. Company guidance is like that news about the future. A strong past quarter is nice, but a warning about tougher times ahead can send the stock down. That's why Wall Street pays close attention to guidance. It's the best clue about what's next. A positive surprise can send shares soaring. A disappointment can trigger a sell-off. For BDX, the guidance didn't raise expectations, so the market reacted negatively. The future always outweighs the past in investing. Let's apply this to BDX. After a strong first quarter, investors expected BDX to raise its guidance, to predict even higher profits for the year. Instead, BDX kept its forecast the same: earnings per share between $12.70 and $13. Analysts were already expecting $12.89, near the top of that range. Investors hoped for a new, higher target, above $13. By sticking to the old forecast, BDX signaled caution. Maybe the first quarter had some one-time boosts, or maybe management sees challenges ahead. The market had priced in a guidance raise, so when it didn't happen, the stock fell. The lesson: sometimes, good isn't good enough if expectations are even higher. The market always looks for the next reason to get excited, or worried. 12. What does BDX's steady guidance mean for the rest of the year? The company had a strong start, but its forecast suggests the next 3 quarters will be more average. To hit its yearly target, BDX's growth will actually need to slow down. It's like running a marathon fast at first, then planning to slow your pace. This makes analysts wonder, why not aim higher? Are there challenges ahead? Rising costs? Tougher competition? The lack of a guidance raise creates uncertainty, and markets dislike uncertainty. Investors will watch the next few quarters closely. If BDX keeps beating expectations but doesn't raise guidance, concerns may grow. If management explains the first quarter was unusually strong, confidence could return. For now, BDX's story is a strong start, but a big question mark for the rest of the year. 11. BDX's story is a classic lesson. The past matters, but the future moves stock prices. Don't just look at last quarter's results. Always ask, what's next? Before earnings, check 2 things. Did the company beat estimates? And what's the guidance? Is management raising, lowering, or keeping its forecast the same? Remember, you're buying future potential, not just past performance. Guidance is your best clue to what's ahead. Great results are good, but a brighter outlook is what excites investors. Don't be discouraged if stocks fall on good news. It's all about expectations. By focusing on both performance and predictions, you'll become a smarter, more confident investor. Keep learning, keep looking forward, and trust the process. The future is where opportunity lies. You can do this.